Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures wavering this morning as investors digest weakening economic data, President Trump's tariff threats, and corporate earnings. One mover to the downside today, AI chip company AMD. The company said its return to the crucial Chinese market is difficult to predict, overshadowing a generally upbeat forecast for its business of making AI processors. Plus, Disney reporting better than expected third quarter earnings with continued growth at its parks and streaming business, overshadowing a tough climate for linear television and films. The company also striking a deal with the National Football League that will give the House of Mouse control of key media assets, including the NFL Network, in exchange for a 10% stake in the sports media company ESPN. And the future of the Fed in focus, as the president said he would make his decision on a replacement for outgoing Federal Reserve Governor Adrian Kugler this week as he looks to make his imprint on the central bank's monetary policy. The Fed announced on Friday that Kugler would resign from her seat on the Board of Governors before her term is up in January. That gives Trump an earlier than expected opportunity to tap a candidate. Let's get a check-in on stock futures. We are seeing indications for a higher open this morning after kind of bouncing around, and that's in part as we have some better than estimated earnings. Not just Disney, McDonald's we're watching as well. We'll be running down some of those numbers in just a moment. But right now, if you look at these numbers, we're seeing indications for about a 0.25% gain for the S&P and the NASDAQ at the open, and the Dow indicating a gain of about 1/3%. Also in focus, just breaking moments ago, headlines on Apple. The White House saying the iPhone maker will boost its U.S. investment commitment by $100 billion. The White House says that President Trump will make that announcement today. It's the latest pledge by the tech giant to increase U.S. production of its products as it seeks to avoid tariffs on its flagship iPhones. Earlier this year, remember, Trump warned that he would hit Apple with a tariff of at least 25% if it did not move manufacturing of the iPhone to the U.S. The company has previously announced it plans to spend $500 billion in the U.S. over the next 4 years. Right now, the share is moving a little bit higher. Of course, we've also heard estimates from many different analysts about how much this could potentially boost the cost of an iPhone if they are largely made in the United States. So we'll see how this all plays out, what timeline we get from Apple in terms of increasing that investment in the U.S. and exactly what it looks like. So still a number of questions, some of which may be answered as part of the president's announcement today. Let's now dig into our top stories of the day. Stocks looking to rebound after a losing day on Wall Street as tech stocks lagged, plus weak economic data fueling stagflation fears, and positive earnings from McDonald's and Disney highlighting some consumer resilience. Joining me now, senior reporters Brooke DePalma and Josh Schafer to talk us through some of these numbers. So Brooke, let's start with AMD because interesting story there. A lot of the numbers looking good, except some disappointment with China clarity here on when it's going to restart shipments there.
Yeah, absolutely. What we're seeing is the street have such high expectations around this chip maker AMD, and ultimately, maybe those expectations were a bit too high. We know that earnings have outperformed expectations every single quarter since Q4 of 2023, but earnings this quarter declined based upon that ban of the company to sell their chips to, or rather ban from chips from China. Now, what we know is that in this battle, in this arms race of the AI revolution, so to say, we know that AMD continues to trail behind that, godfather of AI, Jensen Huang's NVIDIA, as Dan Ives likes to put it. And that's what we saw again. We saw AMD's data centers bring in revenue of up 14% to $3.2 billion. Now that NVIDIA trumps that in comparison when you think about what they posted in Q1. Their data segment jumped 73% to more than $39 billion. Of course, NVIDIA is set to come out later on this month, but the hopes were high, the intentions were high, and now all questions remain about that Q3 guidance and what this could look like when we are able to return to shipments of these AI chips from China.
Yeah, and there's also the question of, aside from the China discussion about what was already priced into the shares. I gotta say, I'm just laughing to myself reading a note from Jordan Klein over at Mizuho, so the sector specialist on tech, and he said, who really owns AMD or NVIDIA just due to upside from sales back into China that have been blocked by Trump? If you do, shame on you, he says. because people are really focused more on the bigger AI story here. But all of that said, Josh, if you look at what AMD has done this year, let alone from the lows, you see maybe why things are pulling back a little today.
Well, Julie, to add to that point, who owns an AI stock for them to not beat on earnings per share, right, in the previous quarter? When you look at why a lot of these AI tech stocks rally, it's because in the prior quarter, earnings almost always beat estimates, right? When you look at what the hyperscalers were able to do last week, when you look at what NVIDIA does every quarter, an earnings surprise is essentially expected, and that is not what AMD did. And then, yes, when you zoom out over the year, it has been the best performing semiconductor of the year. The stock is up over 40% this year, and you compare it to an NVIDIA and a Broadcom, this year it has actually outperformed, as you're seeing on your screen now. But you zoom out over the last 5 years, and AMD has not even come close to the performance that you see in your screen there in blue and yellow from NVIDIA and Broadcom, right? So you've seen a little bit of a catch-up rally for AMD as people wonder where they're going to fit into this AI story. But largely, they have not been near the forefront of it, of course, and they've sort of been chasing. But I think from this quarter specific stock story, it's interesting to think about AMD's rally off the lows and to see this stock reaction when we think ahead to what's coming from NVIDIA at the end of the month. So Bank of America's Vivek Arya, the analyst that covers NVIDIA, he covers AMD, he had pointed out in his NVIDIA preview note, which I know you were talking about the other day, Julie, highlighting that given that NVIDIA has rallied so significantly since that April low, the ability to impress the market for some of these AI chip makers might be challenging this quarter. You're certainly seeing that with AMD, and it makes you wonder about the big one we're going to get at the end of the month, too.
Yes, it does indeed. We didn't just get AMD earnings, of course. And Brooke, you're watching some of the consumer earnings. As I mentioned, we heard from Disney and McDonald's this morning. And as you know, some of the consumer earnings have been a little rocky, but a little bit of better signals here, maybe?
Yeah, better news for McDonald's. They reversed their U.S. same-store sales growth to positive. U.S. same-store sales growth grew 2.5% in the quarter, especially as they leaned into those value offerings. Some key quotes from the call, the CEO, Chris Kempczinski, saying on the call this morning, which is still underway, that overall QSR traffic in the U.S. remains challenged as visits across the industry by low-income consumers once again declined by double digits versus the prior year. Now, what he went on to say is that McDonald's was able to offset that momentum in the current environment by leaning into heavily those meal deals, those key $4 price points, and really get consumers in the door. Of course, you also had the innovation side. You had that McCrispy chicken strips come into play. You had a promotion with Minecraft. They said that all those things is what led to the stellar quarter for McDonald's. You see shares now up in pre-market up about 3% after a beat across all metrics, same-store sales growth, revenue, earnings, and that's what really is impressing the street this morning. A bit of a flip side, when you look at Disney, what we saw there is their streaming profitability turned positive, or rather, streaming unit turned profitable year over year this past quarter, and also their park service did really well. But you do see that stock under a bit of pressure in the early innings here of today, as that was sort of offset by their fall behind in the cable TV network. But all eyes now are really on that August 21st date. We know that we're getting a streaming platform from ESPN that was officially announced. They're launching an ESPN direct-to-consumer app, rather, on August 21st. We also heard last night that they're announced a preliminary deal to acquire a key NFL media assets, including NFL Network, Red Zone, and they're also going to, in exchange, give the NFL about 10% equity stake in the network. And so it's worth noting here that Disney is trying everything right now to really get their streaming service to not only now is profitable, but really get consumers engaged. The CEO saying on the call that the proposition is not only from a consumer's perspective, but also a perspective that it's better than what they had before. They're really looking to up their game here when it comes to streaming. And once again, we're seeing shares under pressure this morning because of that offset with softness in their TV cable side.
Yeah, we're actually going to hear from the CFO momentarily. Josh, let's talk about the economic backdrop quickly here. Some stagflation concerns coming in here. That is slowing economic growth and rising inflation. And the flames fanned yesterday by some economic data.
Yeah, Julie, so yesterday morning you had the ISM Services PMI, and within that index you get sort of an employment index and a prices paid index, and Neil Dutta over at Renmac highlighted a great chart that really sort of speaks to what he called the Fed's quandary right now. So in white you're looking at prices paid, we'll use that as sort of an inflation gauge, right? That's moving higher, and then in green is the employment index, that's sort of your growth concerns. Those things moving in opposition creates a stagflationary environment in some ways, and it speaks to the concerns of the market right now. The one thing I would highlight with this, though, of course, is this is a survey. This is not necessarily the top tier economic data that you often hear someone like Fed Chair Powell talk about or economists care about the most. You're going to get that with the inflation report next week and something like CPI and other labor data. So yes, it's one sign, but it's a quiet week for macro. There's not a lot of top tier economic data out this week. So this is getting a little bit of a closer eye, I think, than it normally would. And we'll have to see if this translates to some of the other data points that we'll be watching throughout the month. But one pin in the bucket for the people that are worried about stagflation, for sure.
Yeah, so-called soft data versus hard data. Brooke, Josh, thanks a lot. President Trump telling reporters Tuesday he would name a replacement for outgoing Fed Governor Adriana Kugler this week. Kugler's departure granting Trump an earlier than expected opportunity to name a candidate who more closely aligns with his calls for lower interest rates. Fed correspondent Jennifer Schonberger joins me now with more. So it seems like he's not going to waste any time filling that spot.
No, Julie, he's not. The president saying, like you said, he is expected to make an announcement to replace Fed Governor Adriana Kugler by the end of this week, and she is expected to step down on Friday. We know that her term is set to end January 31st, so this would be a short-term appointment for a couple of months. The president said he could end up reappointing whoever he fills to that position for a full 14-year term, and it is possible that whoever he puts in that position could be elevated to be the next Federal Reserve chair. The president told CNBC on Tuesday that he has narrowed down the list for who could be the next Fed chair to 4 people. We know that Treasury Secretary Scott Bessent is not on that list. Apparently, he told Trump he doesn't want the position. He wants to remain Treasury Secretary. The president seemed to imply that who he calls the 2 Kevins, former Fed Governor Kevin Warsh and a current director of the National Economic Council of Advisors, Kevin Hassett, are, quote, doing well. So they seem to be on the short list. He didn't deny that Fed Governor Chris Waller, who has been in favor of cutting rates and actually dissented at the last Fed policy meeting, is on that list. So he is thought to be on the list as well. I would just add, I would think that Michelle Bowman, the other current governor who dissented at the last policy meeting, is also on that list. And Julie, I have just learned that hedge fund manager James Fishback spoke with the president on Monday morning, making his case to fill Fed Governor Adriana Kugler's slot for the short-term position for the next couple of months. And if he was offered the position, he would accept.
Huh. That is very interesting.
A new hat to throw into the ring there.
Yeah, I gotta do a deep dive, but if it's who I think it is, I would think he would be the youngest Fed appointee ever.
He would be the youngest. At 30 years old, he would be the youngest appointee to the Fed. Trumping Kevin Warsh, who was the youngest at 35.
Wow, all right. Well, gonna do a deep dive, do some good Googling there in my future. Jennifer, thank you very much, appreciate it. Now time for some of today's trending tickers. We are watching Novo Nordisk, Supermicro, and Shopify. First up, Novo Nordisk falling after sales showed the weakest growth in 4 years. The results highlighting how the drug maker's losing ground to Eli Lilly in the crucial U.S. market for obesity medicines. The commentary coming just 1 week after a profit warning from the company. The numbers released today offer a detailed look at the quarter when Novo stumbled and the drug maker decided to seek a reset by ousting its longtime CEO. Next up, Supermicro plunging after the company lowered its fiscal year revenue forecast and projected quarterly profit that fell short of estimates. The results raising questions about sales and pricing pressures around powerful AI servers. Supermicro shares have surged 88% this year on optimism that it would benefit from soaring demand for AI gear. Instead, the company's revised fiscal year outlook raises questions about its ability to capitalize on demand for artificial intelligence equipment with the latest NVIDIA chips. And finally, we've got Shopify jumping today as revenue topped estimates and as the company boosted its outlook for the third quarter. The e-commerce platform reported second quarter results coming in better than Wall Street was anticipating, with the analysts highlighting growth in both revenue and gross merchandise volume. And as always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up, we will be talking to Disney CFO Hugh Johnston following the company's strong earnings and as it strikes a deal with the NFL. That's coming up next on Morning Brief. Our own Brian Sozzi, there he is. He's going to be doing that interview. Stay tuned. Disney shares taking some pre-market losses after the company's third quarter results. Strong revenue in the parks segment and a swing to profitability for its streaming services, leading Disney to raise its full-year guidance, despite lower performance from linear assets. Opening bid host Brian Sozzi is with me to talk more about this. You know, Soz, it looks like things were mostly positive on the face of it, so it's interesting to see the shares lower.
Yeah, I think the main reaction here, Julie, why you're seeing the stock lower is Disney beat on earnings but didn't lift that full year earnings guidance up as much relative to the beat or as much I think on some of the street wanted to see after a beat they just put forward. Now, I just got off this earnings call, Julie, listening to it on Yahoo Finance. Love this new feature on our platform. Got to continue to hype it up, but I didn't hear anything regarding consumer weakness at the parks. You heard Bob Iger talking about on the call how they're going to roll out more cruise ships, make a lot more money. The consumer still seems strong to me based on the commentary on that earnings call. And of course, Julie, really a big series of deals for Disney over the past 24 hours, that NFL deal and this morning now one with WWE. Really transformational stuff that Disney has put forward here, all in the attempts of boosting their streaming efforts later this month. I believe it's August 21st. ESPN, their new streaming service, will launch.
Yeah, and then of course you also have some new deals from Disney, you know, dealing with that with ESPN, that is, in the NFL. You also have a new wrestling partnership. I'm sure you're excited about that.
Well, look, Julie, no small surprise. I've grown up watching wrestling, so if I can watch it in one dedicated home, and if this case is ESPN, I will do so. Important to note, too, Disney saying on that earnings call, Julie, the NFL deal, I believe they said it would be 5 cents accretive to their earnings once the deal closes. So that was very important. It was good to see the street hear that. But again, the company didn't come out and lift that guidance up by as much as people thought. Then also brushed off some fiscal year 2026 commentary in terms of guidance. Now, a couple months ago, Disney put out longer-term guidance for fiscal 2026, looking for double-digit EPS growth. Didn't back away from that, Julie, but didn't come out and I think perhaps lift it like some people wanted.
Yeah, and you also have to wonder about the theatrical releases, right, that didn't do great. Thunderbolts? I kind of wanted to see Thunderbolts, and then I never got around to it.
Yeah, no, the creative slate has become a lot stronger, Julie, under Bob Iger. So I know that's something they're very much focusing in on. But let's drill down to this quarter even more. The earnings, some of these deals. Joining me now is Hugh Johnston, Disney's Chief Financial Officer. Hugh, fresh off your earnings call, thanks for hopping on Yahoo Finance. You heard me probably talking to Julie about some of these deals. The NFL deal, big deal. This morning, WWE deal, big deal. Let's start on the NFL. 10% stake that you're giving the NFL for ESPN, that's a very large number, Hugh. Why is it worth it?
Oh, I think it's completely worth it. And good morning to you, Brian and Julie. Great to be with you guys again, as always. Really, we feel terrific about the assets that we'll be getting for the deal. The combination of the NFL network and all of what that brings, in addition to that, combining our fantasy football business with the NFL's fantasy football business, plus the ability to market Red Zone. Overall, we feel terrific about that. And obviously, there's 3 additional games we'll be getting as well, which are of significant value to us. So as we think about it from 2 perspectives. Number one is the impact it's going to have on the ESPN DTC business, which we think will be super positive. And then second, obviously, putting the NFL network together with ESPN will create both revenue and cost synergies. The outcome of that from an investor perspective is it'll be accretive by about $0.05 before purchase accounting. So we think it's a great deal for the NFL, and we think it's a great deal for ESPN as well, which is the best of all worlds.
Hugh, I've seen ESPN various estimates in terms of valuation, $25 billion, even as high as $30 billion. That would make this NFL stake up to worth about, $3 billion? Is that correct? Do I have my math right?
Your math is correct, although we haven't talked about the value of ESPN or the value of the assets, because what we're doing here is exchanging equity in ESPN for the assets and the income streams that we're getting. So we haven't really put a specific valuation on it. As I said, the thing I can tell you is it's accretive to the Walt Disney Company. So from a financial terms perspective, we're very happy with the financial terms.
Hugh, as you know, Red Zone has a sacred following, very passionate base in terms of that programming. Do you and Bob Iger, CEO, do you envision ESPN talent going onto that platform?
You know, we haven't talked about it at this point. It's probably a little bit too early for us to go there. I know the guy who hosts ESPN, a fellow Syracuse University graduate, by the way, does a fabulous job. So I certainly expect us to continue and, if anything, try to be additive to that capability, because it's such a good one.
Now, the deal, of course, has to get approved by regulators. What is Disney willing to give up to get this approval from the Trump administration, which has not hidden its views on traditional mainstream media?
Well, I'm hopeful we're not going to have to give up anything, to be honest with you. We don't see it as in any way anti-competitive. Actually, quite the opposite. The way we think about it is this is so pro-consumer. It really makes their lives easier. Sports fans, it's a bit of a challenge right now because content is spread across so many different places. And we view this as a convergence that we actually think will make it easier for the sports fan, and in addition, it'll give them the capability that we have as ESPN to produce fantastic content. And in addition to that, with the ESPN DTC launch, we'll be able to bring a lot of new capability as we innovate for the consumer as well around things like multi-view games and personalization of SportsCenter. And in addition to that, fantasy and betting and enhanced statistics. So we view this as super pro-consumer and are certainly positive from that perspective. And as I said, we think it's a great deal for the NFL owners and the NFL players as well. So this is truly a win all around. We're hoping that the regulatory process will go extremely smoothly.
Hugh, $1.6 billion for a 5-year deal for WWE. I'm a WWE fan. It's good to see WrestleMania and other events being on one home. What's the return on investment you're looking for? That also is a very large number.
Yeah, it's a big investment, but we do expect positive financial returns from the investment. So from that perspective, we haven't gone any deeper than that. But the beauty of where ESPN right now is with the NFL, with the NBA, with college football playoff, SEC, and NHL, we have so many, such a good load of volume of really high quality content. We can pick and choose where else we want to be. And as a result of that, we're in a good position to strike good financial deals for ourselves. So we expect this to be another good financial deal for ESPN.